Welcome to the Live Wealthy podcast with Dawn, where we are growing our wealth and our worth at the same time. You ready? Let's go. Welcome to the Live Wealthy podcast. My name is Dawn. I'm a certified financial planner, a behavioral financial advisor, and the CEO of a company called Releve Financial Group, where we manage our clients' assets, their investments, we do their taxes, and of course, financial planning. And today's podcast is about the true cost of inaction, not taking action around your finances. And what if I told you that it would cost you over $100,000 over your lifetime if you do nothing? And better yet, what if I told you if you have a financial advisor or a broker, but you haven't gotten a second opinion around managing your money, it could cost you 3 times as much money. So today I'm talking about the true hidden costs of inaction with your money. Now, over the last multiple decades of me sitting in client meetings and helping them with their finances since 2001, I have to say that receiving professional financial advice is not a luxury. It is actually a smart investment. And I'm going to talk about that today because when you do nothing or you're not getting a second opinion, there are both tangible and intangible costs to not taking action. So these tangible costs, what are the tangible costs by not taking inaction? Well, I can tell you this, that it'll cost you. It could potentially cost you. And I've seen this, the reality of this in my practice, over 3 times the amount of money that you could have today and could have tomorrow by doing nothing. Okay. You're costing your portfolio or yourself 3 times the amount of money you could have. That's the tangible result or cost by doing nothing. Now, what are those intangible costs as well that I'm talking about? The intangible costs are, it costs you your well-being, like not being able to live comfortable with your money and always living on the treadmill of life of stress and anxiety for more with your money, where you never arrive at enough. Those are the intangible costs, and those are priceless, right? And so by not receiving financial guidance, so it's so vitally important that all of us receive financial guidance, whether we think we have money or we think we don't have money. It's not a luxury. It needs to be done. And yes, you can afford these costs that are associated with hiring a professional. So in my business, I've seen lots of client mistakes, people mistakes that they've made with their money. There's these mistakes of people trying to do their finances on their own. And there's these mistakes of thinking they've hired a professional, and they have hired a professional, but that professional is not doing their due diligence in serving the client appropriately. So what are these mistakes that I'm talking about? The first mistake is for if you are a person that thinks you have the time to do it on your own, you're probably lying to yourself because you don't take the time to do it on your own. And the other mistake, along with the time that you don't have that you think you have, is also related to the timing of your decisions. You might be really smart and you might make really good financial decisions, but the timing of those decisions are not always in your best interest. Why? Because we all have emotions around money. So what am I talking about? So if you are someone that's managing your money on your own, or you think that you can do it on your own and you don't put the time in, or when you put the time in, you make bad timing decisions because of your emotions, is the examples are like potentially selling your money at the wrong time or chasing trends, investment trends. Like, it's a good time to be in crypto, or the trend of it's a good time to be in AI. Those might be necessarily true, but we over concentrate our portfolios in some of those trends that are out there. And then we face losing a significant amount of money. And when we do, because those asset classes are very volatile, and then when we lose more money than we can handle, then it creates a stress and anxiety, and it just makes a toxic environment for ourselves and everyone around us, because then we're stressed about money. Here's the interesting thing about the mistake that I've seen. I actually had, this wasn't a client, but this was a friend that came to me last year and said that they wanted to get out of the stock market because of the election. And I told this person it was a terrible decision because it was emotional to move their money out of stock into cash before the election. And here's why. It's not because the stock market went crazy after the election and this person was wrong. As I record this podcast, the stock market's not doing so great right now. So it's not about the prediction of what we think is going to happen after the election. What it's about is that this most important explanation of why we don't allow ourselves to take emotional money decisions in our own hand. Even myself, as a wealth advisor, for 25 years, I still hire out people to help me with financial advice. And here is the main reason. And it's not because of my knowledge. It's because of my emotions that are attached to my money. And if you, as an investor, miss only 10 of the best trading days over a 20-year period, your rate of return or performance decreases by half. Let me say this again. If you as an investor miss the best 10 days over a 20-year period, your performance is cut in half. That is why that is the biggest mistake to hire and yourself to manage your money. It's because the timing of your financial decisions and the time that you don't have to manage that money. The second biggest mistake is that I see people when I'm out networking, they say, Dawn, I do have a financial advisor. Thank you very much. I love what you do, but I have a financial advisor. But when have you actually looked at what that financial advisor is doing for you and conducted a separate third-party professional review of that advisor's work? I brought on a client over the last 12 months that loved their advisor. However, what happened is when I started looking at the advisor's work, me as the third party, just looking at, what's going on, because as a fiduciary, we have made a pact in our firm to never bring on clients if we can't put them in a better position. Like if we can't save them fees, save them taxes, or help their investments performance better, like we don't bring them on. And so I was doing this review of a prospect's portfolio, and they had a financial advisor, and they're just like, Dawn, give me an opinion on what this advisor is doing for me. I'm like, do a professional review of their work. So I did. And what I found is that their hidden fees in their investment portfolio were just shy of 1%. The client didn't know about that. This client was paying over 8% in investment fees on top of these internal fees and wasn't getting financial planning at all, which I believe financial planning is the most important aspect of helping people build wealth. So this client wasn't doing financial planning. What we found is that they were oversaving their money by a significant amount of money, which in the end, they were just going to pay extra estate taxes. So they weren't like fully living their life today. Like I was like, if you could spend more money today, would that provide you a better life today? And they said, well, of course. Like we feel like we have to save for the future, but they really didn't. They were oversaving their money just to pay more in estate taxes in the future. That's what a financial plan did. And then thirdly, with this particular prospect who became a client, we found missed tax write-off opportunities of over $50,000 a year. Okay. A missed $50,000 tax write-off by how this client was structuring their income. So you think about that, that is a huge opportunity for me as the third party reviewer to go to this prospect and say, here's what the reality is that's going on in your portfolio. Again, this client wasn't even aware of what was happening, and they had a good relationship with this person. So if you have a financial advisor, I'd encourage you, or a broker, I would encourage you to really do, if you want to do the professional review, if you want to get a third party to do it, but like analyze, what are you paying in fees? Are they doing tax planning from an income and investment perspective? Are they doing financial planning? Are they looking holistically at the portfolio? Because a true fiduciary advisor that's doing comprehensive financial planning should not cost you. And those fees should be transparent. They shouldn't be hidden underneath investments. In fact, there's a study out there by Vanguard that says the true value of a fiduciary is where you pay an advisor approximately 1% of your portfolio. And that's if you're not a business owner. And if you're a business owner, you could potentially use that 1% fee as a tax deduction. And then it might be costing you like 0.6%. But let's just say you couldn't write off that fee, and you're paying an advisor 1%. But a true fiduciary should return back to you a 3% net return on your overall money by doing the proper work. That includes tax planning, it includes minimizing fees, and it includes financial planning. And you know what else it includes, which I think is the most important thing, is behavioral coaching. Behavioral, emotional coaching people with money. I don't care how much money you have or how much money you think you don't have. Behavioral coaching drives that rate of return in terms of what you get back in your pocket for money and what lands in your portfolio and what lands in your wallet. The majority of it comes down to behavioral coaching and taxes. And I can tell you this, that when you properly align your financial goals and your personal values to your money, no algorithm on this planet today and in the future will ever replace the value and how much money you can receive in your pocket by aligning your goals and your values. No algorithm will ever take the place of that. So this behavioral coaching is important. Also, what is important is rebalancing your portfolio. You might be a really good stock picker. You might be a really good investor, but that is only a portion of the results that you're going to get from a performance. Like, how much rate of return are you getting out of that investment? Because there's something called rebalancing. You can pick great investments, but those investments, because of the volatility and the movement in the stock market and the bond market and alternatives on a regular basis, that the money needs to be rebalanced. And when you rebalance your portfolio, what happens, and by the way, rebalancing takes significant amount of time, but if you rebalance your portfolio appropriately, what happens is that you are keeping what I would call the integrity of your risk tolerance. So if you're not rebalancing your portfolio and the stock market goes up, then you have too much exposure in stock, which makes your portfolio too aggressive, too risky for what you can handle in your portfolio, or what your financial plan says you should be able to handle. And so then you're too aggressive and you're taking on too much risk, which when you take on too much risk, you're taking on too much downside because the investments will they will lose, right? And so you're not looking at that. You know what else you're not looking at when you rebalance is when your portfolio gets out of alignment and you're not rebalancing your portfolio, you're losing out on the opportunity to sell high and buy low. We all want to sell at a profit. We all want to buy in to the stock market and to fixed income market and the alternative markets at a discount. Okay. Well, if you're not rebalancing your portfolio, you're not taking advantage of that. That is a huge thing that an advisor or an advisory team does. They also look at the tax efficiency of investments. Like, you guys, you have income. Most of you just focus on your taxable income, but there's tax there's taxes due with investing too. And your income and tax plan, your income and your investment tax plan need to talk to each other. So you got to be tax efficient with your investments. And then there's all these other things that I won't get into the details with on this podcast of the true hidden costs of inaction. But there's like, when do you do a Roth conversion? And if you are in retirement or close to retirement or pull money out of your portfolio, what's the effective withdrawal strategy out of your portfolio? Because where you take money from, what investment A, B, or C, what investment you pull money from to provide you income to pay your expenses can make or break your portfolio. Okay. So that's where just some of the value of the extra 3% an advisor can bring to you. So if you are one that doesn't have the time and you think you have the time, or if you're one that makes poor timing decisions, maybe you have the knowledge with investments, but you make poor timing decisions, then that is something you also need to look at of what's more valuable to you, because it's not about the cost of hiring an advisor. It's about the time you're missing in the market. So what is your real cost? So I look back at 2024 and I want to ask you this question. Like, did you waste any money? Did you waste any money in 2024? Did you look at your closet? Are there clothes in there that you didn't wear? Look in your pantry. Is there food there that just, expired and you threw it away? Look in your garage. Is there a car there that was super expensive, but you don't drive that much? Have you looked at your home and auto insurance premiums or your life and disability premiums? Are you wasting money on subscriptions? Like, where are you wasting money? Because most of us do waste money. But I can tell you this, is that if you turn that wasted money into investing for your future, you're not giving up today, but you're going to have money available. In fact, a lot of money available for your future. In fact, if you even said, you know what, Dawn, I just looked at my closet, I looked at my car. Yeah, I wasted about $5,000 this year. We all probably waste $5,000. But if you looked at $5,000 compounding year after year at 7% for 20 years, you're giving up. You're not wasting $5,000 a year. You're actually wasting that money turns into over $200,000. So when you buy things, when you sign up for a subscription, when you purchase food or clothes or whatever it is, what is that true cost to you? It's the opportunity cost that you're giving up, the opportunity to have approximately $200,000 or more versus what you're purchasing today. That is so important. And so the point is that the real cost of inaction is looking at what are the tangible costs that an advisor can give you, or that advisor can hold you accountable for not wasting money. What are those intangible costs? The cost of not living a well life, the extra stress and anxiety that you have with money that not impacts just when you're paying your bills, but it impacts your relationship and how you show up in life. And it impacts the relationships you have with the people closest to you. We know that money is one of the leading causes of breaking up professional and personal relationships. So I'm here to give you the peace of mind. Okay. So what financial mistake have you made last year? And what financial mistake that you can take away this year in 2025 so you can be on top of your game and make sure that your money is working for you? My call to you is this, is don't let time get in the way. The time of you thinking you're going to do it or making bad timing mistakes. So I want you to fill out the financial assessment. I will personally do a review of what you have going on if you have an advisor and just want a second opinion. Okay? If you don't have an advisor, fill out the financial assessment. And what we will do, many of you are going to be able to have a complimentary consultation with myself to really talk through some of these inefficiencies. Whether you hire us or not is not the main goal. The main goal is to put more money in your pocket. Now, am I in the business to bring on new clients? Absolutely. Like we all are. Like we can't be shy about, like, I'm in the business to grow my investment firm. I have incredible team of investment and tax experts. So of course we're looking for new clients. But at the end of the day, everyone doesn't become a new client of ours. But that doesn't mean we're still not going to give you our time to give you education on what to do with your investments, because that is the right thing to do. So we know there's a significant cost to inaction, and it can cost you hundreds of thousands, if not 300,000 or more, by you just sitting back. So make 2025 the year for you to take action and to live a wealthy life.